Did you ever dream of owning a real estate without a large capital? What if I told you that you can invest in real estate without needing a hefty down payment? You don't have to worry about the tenants and also not worrying about the maintenance issues. Today we are going to dive into the REIT, which is the Real Estate Investment Trust, ETFs or exchange traded funds. You can get even started for less than $50 and you can get paid every month as a dividend. REIT or the Real Estate Investment Trust are companies that own, operate and finance income-related properties. From apartment buildings to shopping malls to office complexes to industrial properties and now even data centers, they cover all of them. And the best part, they're legally supposed to pay a significant portion of their net profit to shareholders as dividends. But wait, what are REIT ETFs? They are exchange-traded funds that invest in a diversified portfolio of REITs. REIT ETFs spread your money across many real estate sectors. Think of it as buying a slice of the entire real estate pie, not just one bite. Hello, welcome back. My name is David Das, a retired engineer, and you're watching my YouTube channel, Think and Retire. In this channel, I talk about building wealth and income from the stock market. I know a lot of people watch my videos and use that information for their own trading and investing, but unfortunately, they do not like my videos and also have not subscribed to my channel yet. So my request to you, if you find value in my video, please like it and share it. And if you have not subscribed, please do so you do not miss similar videos in the future. So the question is, why choose REIT ETFs? In my opinion, there are 5 key reasons why you should invest in REIT ETFs. Number 1 is the low cost entry. You do not need large amount of money to get started. You can actually get started for even less than $50. Number 2 is the diversification. Basically, with these REIT ETFs, you have exposure to different real estate market sectors. Number 3, passive income. These REIT ETFs pay consistent dividends and that can supplement your monthly income. Number 4 is very important, which is the liquidity. Unlike the physical real estate, you can actually buy and sell REIT instantly. And number 5, I think is very important, no landlord duties. You can say goodbye to managing tenants and also clogged toilets. So what are the disadvantages of REIT ETFs? Number 1, higher fees. Normally REIT ETFs have a management expense ratio. So if the management expense ratio is 0.50%, then there's an annual fee of $50 for an investment of $10,000. And this is generally more than the broad market equity ETFs. Number 2 is concentration. Some of these REIT ETFs have more exposure to certain type of properties, like for example, residential property or office type property or industrial type property. So you have to do a proper research before selecting the particular REIT ETF. Number 3 is the interest cost. If the interest rises, the borrowing cost rises. At the same time, the bond yield rises, so people shift from REIT ETFs or the REITs to the bonds. Number 4 is the market volatility. The REITs and the REIT ETFs are tied to the stock market, so there is a volatility associated with that. And number 5, dividend taxes. The money that you make may be taxed differently than your capital gains, and again it depends on your location. In this video, I'm going to talk about 4 Canadian REIT ETFs, and the good thing is all of these 4 ETFs pay monthly dividends. And I will also talk about 4 US popular REIT ETFs. Please keep in mind that this video is for educational purposes only and not a recommendation to buy or sell any stocks. Please do your own research before investing. The first Canadian REIT ETF on my list has a ticker symbol of XRE and is called iShares S&P TSX Capped REIT Index ETF. The inception date is 17th October 2002. The management expense ratio is 0.61%. The dividend yield is 5.62% and it pays monthly. According to the holdings, it has 15.26% weight of Canadian Apartment Properties REIT and 11.96% of RioCan. So that means it's pretty top heavy. The second Canadian REIT ETF on my list has a ticker symbol ZRE. It is called the BMO Equal Weight REITs Index ETF. As the name suggests, it has equal weight for each of these constituents. So if you do not like XRE's top-heavy nature, then therefore ZRE may be a more reliable or suitable investment with greater diversification. The third Canadian REIT ETF on my list is CI Canadian REIT ETF with the ticker symbol RIT. The inception date is 15th November 2004. It has relatively higher management expense ratio, 0.87%, because it is an actively managed REIT. The annual dividend yield is 5.26% and it pays monthly. As I mentioned before, this is an actively managed REIT ETF. So the ETF manager will select REITs that are predicted to outperform, and also they will try to manage the portfolio on an ongoing basis. Unlike the XRE and ZRE, this RIT also hold US listed REITs, making it a good choice for investors trying to diversify outside of Canada. Number 4 on my list has a ticker symbol VRE, and it is called the Vanguard FTSE Canadian Capped REIT Index ETF. The inception date is 2nd November 2012. The management expense ratio is 0.39%. The annual dividend yield is 3.04%, and again the good thing is it pays monthly. The VRE differs from other REITs that it also has few non-REITs. Like this include the real estate service companies like First Service Corporation and real estate operating and development companies like Colliers International. The first US REIT ETF on my list has a ticker symbol VNQ, and it is called Vanguard Real Estate ETF. The inception date is 23rd September 2004. The management expense ratio is 0.13%. Annual dividend yield is 4.01%, and it pays quarterly. They invest mostly in retail, healthcare, and industrial properties. The second US REIT ETF on my list has a ticker symbol SCHH, and it's called Schwab US REIT ETF. The inception date is 13 January 2011. It has a very low management expense ratio at 0.07%. The annual dividend yield is 3.36%, and it pays quarterly. And it also invests not only on REITs but also on real estate management and development companies. The third US REIT ETF on my list has a ticker symbol XLRE. The inception date is 7th October 2015. The management expense ratio is 0.09%. Annual dividend yield is 3.56% paid quarterly. And in addition to REITs, it also invests in real estate management and development companies. Number 4 for US REIT ETFs on my list has a ticker symbol IYR. The inception date is 12th June 2000. The management expense ratio is 0.39%. The annual dividend yield is 2.67% paid quarterly. This ETF not only invests in REIT but also in the domestic real estate stocks. So how you can get started? If you do not have a brokerage account, you should open one and get everything set up. Number 2 is you have to research the ETFs which meets your investment objectives. And number 3, invest whatever you can afford and get started. REIT ETFs are a game changer if you want to get started in the real estate without investing a lot of money and all the headaches associated with tenants and maintenance issues. They provide a unique mix of income growth and diversification. So if you are just starting out or adding to your existing portfolio, REIT ETFs can actually help you grow your real estate wealth. If you find this video helpful, please give it a thumbs up. And if you have not subscribed, please do so and press the bell icon so you do not miss my future updates. Thank you very much for watching. Happy investing.